Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What's going on today? Well, it's Monday. The markets are open. Dow's up about 200. NASDAQ only up about 20, but we're having an update nonetheless. We got a very big week ahead of us. The Federal Reserve coming out on Wednesday. They're going to raise it up another quarter basis points. We'll see how that has an effect on the market. Also, we got earnings this week. Big earnings from the tech companies, Google, Microsoft, Meta, all coming out with earnings. So we should get some fireworks later in the week. Right now, the market's kind of the calm before the storm. Now, I want to talk a little bit about something here. Now, the S&P is trading with a PE ratio of over 20, actually about 21. The PE ratio on the S&P 500 is sitting right around 20, 21, let's call it. Okay, so what happens when you buy the S&P with a PE ratio of or over 20? If you look at a 5-year span after you buy it, typically the stock market would be flat to lower if the PE is above 20 when you buy the S&P. You go out 5 years, you're going to be flat or you're going to be a little bit lower. That's what history tells us. Now, right now, the PE on the S&P 500 is up around 21. Okay. Now, over the last 2 years, how's the stock market done? Well, the stock market's been pretty flat, actually. It's right where we were 2 years ago. 2 years ago, we were in the same place roughly we are now. So those 2 years, the market's gone nowhere. If you buy the market now, over the next 5 years, will probably be either flat to lower. So that's 7 years that you'll be having very bad performance in the stock market. Not bad, just no performance. It could be flat. Let's say it's flat. Now, worst case, it comes crashing down, which is a possibility. But my point here, if you're in this market as a long-term investor, you might be better off putting your money in just, well, treasuries. Treasuries are paying about 5% right now. So 5% on your money over the next 5 years would be, 25% up as opposed to flat or lower, which I believe the stock market is going. That's just my opinion. I think right now, we're in a topping out process before we come back in. And I do think we're going to come back in. So let's get over to the real estate side of things. Now, what if real estate stays at the same, just like the stock market over the next 5 years? Let's say the housing market stays flat. Now, we've been flat for the last year, right? We're actually down a little bit, but let's call it flat. And what if we're flat for another 5 years? Well, would you be better off owning the house or would you be better off renting the house? Now, you see the real estate agents, now they walk around all puffed up and telling you have to get in the market, you have to buy a house, and they're kind of targeting the renters because the renters are the target. They need people to come in and buy this market at these elevated prices with elevated interest rates. So they go out and try to find renters and tell them, look, you're not participating in the real estate market. If you participate in the real estate market, you can get all that appreciation because real estate's going to go up. Well, that's one take. My take is you could maybe it doesn't appreciate. What if it depreciates? Well, then you get to partake in that also, the depreciation, which would be wiping out your down payment. Now, real estate agents will also tell you that if you're renting, you're just throwing your money away. You're throwing it away to the landlords. Now, I disagree with this also. Look, if you buy right now, you're going to be throwing your money away to the banks because right now it is cheaper to rent than to buy. In my particular area, it's about 50% cheaper to rent a place than to go out and buy the same equivalent house. Let's just take a typical $1 million house. You put down $200,000 and let's just say your payment then is about $7,000 a month. Well, you could rent that same house for about $3,500, about 50% less in many areas. Most areas, some areas are only down 30% for renting. So let's say we're flat for 5 years. All right, so you'd be saving basically $40,000 a year. Over a 5-year period, you'd be ahead $200,000 ahead by being a renter than being an owner. But you see, the real estate agents, they don't want you to think that renting is a good thing. And don't get me wrong, I love real estate. It's just kind of a bad time to be going out and buying a house. Now, also in that rent versus own scenario, you'd be better off by putting your down payment, the $200,000 you put down, just put that into the treasuries at 5%, right? I mean, you'd pick up, if we're flat for 5 years, you'd pick up another $50,000. So $40,000 difference for rent versus own over 5 years, $200,000 plus another $50,000 you could pick up for your down payment, just keep it in treasuries. So that would be $250,000 you would be ahead of the game. But yet the real estate agents, they want you to believe that you cannot stay a renter because rents only go up. Well, look, if you go out and buy a home, you know there's more to buying a home than just locking in the interest rate. Oh, now the realtor, they'll tell you you're locked in at that rate for 30 years. But there's principal, interest, taxes, and insurance. How does insurance bill look every year? Keeps going up, keeps going up. You're in Florida, up about 100%, 200% in some areas. Your insurance bill went up that much. Isn't that crazy? What about expenses when things break? Let's say the heater goes out. Well, okay, that's $3,000, that's called. But what if you need a new roof? That's like $20,000 or $30,000. My point is that home ownership is expensive, and there's a lot of expenses. But the real estate person, they want to tell you that you have to get in to create legacy wealth. I don't think that's true right now. Now, look, I'm a real estate broker and I'm a big believer in real estate. It's just not a good time to buy right now. Now, a lot of people, they think that, you have to own, and the real estate agents, they're kind of pushing you into this home ownership thing. They want to lock you down for 30 years. Now, there's a term that came out, that everybody's using. It's your forever home because, of course, you're locked in at that 2.8%. So your home is your forever home. That may just be your starter home. I look back on my life, the first house I bought, it was an interesting house. But if that was the house I was locked in for forever, oh man, I would have been very depressed. I would have been depressed being stuck there for 30 years. But yet that's what they're kind of doing right now, right? They're not going to leave their house for 30 years because they're stuck there because that's their forever home. Look, if you want to get out of that forever home, let's say you bought it in the last year, right? And let's say you're not happy with your forever home. All right, so you want to sell it. Well, what happens? Well, you're already down money because year over year prices come down. So you've lost a little bit of your equity, a little bit of your down payment has been wiped out, but it's going to wipe out the rest of your down payment to get out of it because it's going to cost you that 8% to get out, right? All right, so now this is kind of funny. So the agents, they're trying to push the renters into buying homes because they need business. They're starving for business. Now, this is really fascinating to me also. All right, so let's take a look at the number of agents out there. The National Association of Realtors tell you it's about 1.6 million agents. Now, how many sales are there a year? A little less than 400,000 right now because the sales are crashing, right? The sales volume's crashing. So what is that? Well, it's a little over 2 homes per year per agent. Now, all right, now I'm just going to go with the averages here. So the average agent, let's just say he gets to sell 2 homes per year because that's average, right? Okay, so now what's the average cost of a home? About $400,000, right? Now, what's his commission on that? Well, it's typically 6%, but each side gets 3%. So the agent that brings the buyer in, he gets 3% of that $400,000. So he gets $12,000, but he didn't get to keep the $12,000. He works for a broker. Now, I used to have agents that worked for me, and when I was their broker, the typical split is 50-50, but I let them keep 60, and I'd only take 40% of it. So his $12,000 on that house sale, he's got to give, let's just call it he's given, $4,000 of that to his broker, right? right? So he's giving $4,000 to his brother. So he keeps $8,000. Now he gets to do this twice a year, gets to sell 2 homes. So he makes $8,000 and $8,000. Now this is just a typical agent. So he is making $16,000 a year. And this is who you're listening to telling you that it's the right time to buy. Look, at real estate agents are not getting rich right now. Most of them are starving. Most of them are getting out of the business. Now, statistically, they say the average agent makes $40-some thousand. All right. But right now, the sales transactions are crashing. I think he's down below $20,000. And it's worse than that because there's what's called the 80-20 rule. Everybody makes heard of this rule. 20% of the agents do 80% of the business. In real estate, it's more skewed than that. It's actually about 10% of the agents doing 90% of the business, leaving the other 90% of agents to fight over the extra 10% of the scraps. Look, at most agents are out there starving right now, and they're the ones telling you that you have to buy a house. You can't be a renter all your life. You have to create this legacy wealth. Well, I just don't see it that way. I don't really see it that way. Now, they're saying that house prices are going to go up. You can listen to Dave Ramsey, Barbara Cochran. They'll tell you it's a no-brainer, Mike. They're going to go up because there's no inventory. And once they reduce the rates, once the Fed pivots, prices are going to skyrocket. Well, and they say they're going to skyrocket because all this pent-up demand. Now, look, this is not a popular opinion, but my opinion is when that rate starts coming down, if you look back in history, it's proven when the rate starts dropping, the home prices actually are going to be coming down with it. Now, why is that? You see, I don't think the demand is pent up with the buyers. I actually think there's a lot of selling demand. A lot of sellers are waiting to dump their home onto this marketplace, and they're waiting for them to lower that interest rate, and that's when they're going to be dumping their homes onto the marketplace. And you might get a big shock. There might be a couple million homes coming onto the marketplace all at once, which could send the market down a lot lower. Now, I know that's not a popular opinion, and you can have your opinion that home prices are going to double from here. But when you buy into this bubble concept, which is a big bubble right now, the biggest in the history of the world, it's never been a bigger bubble right now. And what are the odds that we're really going to double in price? Now, best case scenario, maybe we're flat for those 5 years. But if we're flat for 5 years, why not just take your down payment, put it into the treasury market, and then rent a property, and you'll be ahead of the game by about $250,000. Doesn't that make a little more sense? It probably does, but that's not what the real estate agents are going to tell you. They're going to tell you you have to get in. It's the only time to buy. You see, there's this treasury. You see, you can put your money in treasuries, but you don't want to do that. You want to go out and buy a house. You want to get that money working for you. You want to create legacy wealth because the supply and demand is going to make these houses skyrocket to the moon. It's just not my take. I think there is more pent-up demand on the seller side where people want to sell their home, but they're waiting for the Fed to pivot because they think that's going to create a higher price, but they're going to be in for a rude shock. It's going to actually create a lower price for them. And then it's going to be this race to the bottom sort of thing where the first guy gets out up here. Now, Billy Bob, he got out up here, but the next guy, he's going to get out close to him, but he's not going to reach that number. A lot of people think when the Fed pivots that those Billy Bob prices are going to be hit again. I don't see it that way. When the Fed pivots, I say it's going to be that race to the bottom. Now, could I be completely wrong? I could be. Do I think I'm going to be wrong? No, I don't think I'm going to be wrong. I think Barbara Cochran and Dave Ramsey, I think they're going to be wrong. They're the ones telling everybody it's time to buy. Never been better time to buy. I don't see it. And I think they're smart enough to know that that's not the case. I mean, you can look at a bubble. You don't buy into a bubble. That's not the time to buy in. You buy in when there's not a bubble, after the bubble pops and a ton of inventory coming onto the marketplace. And that inventory is coming. There's going to be financial distress for a lot of homeowners right now. I'd say there's over 10% are in financial distress, and they're deciding what to do. They're trying to hold on to the house, but they're maxing out their credit cards. They're getting their cars repossessed. I mean, things are not good right now. A lot of people think everything's good out there. I don't see it that way. I think it's very hard times for people right now. I think this inflation thing has hurt a lot of people, a lot of homeowners. They're not expecting these high expense bills on their houses. They're not expecting what they have to pay for food and other things. They don't have the money left over for the mortgage. And that's why 1.5 million of them are already, 60, 90 days late on their mortgage payment. And these are the good times. This is where the economy is doing good. The layoffs haven't started. The recession hasn't started. But Mike, there's not going to be any recession. We've missed the recession. It's all over, Mike. Didn't you hear? We're going to go straight up from here. These are the good times, and we're just going to let them roll. And I'm in favor of that. Maybe your area only goes up. Maybe it's going to double from here, but I would not be a buyer into the biggest bubble in the history of the world. That's just my take. You can go out there and buy a house if you want. Why not? I mean, hey, a lot of agents are starving for the business. They're making less than $20,000 a year right now. I don't know how they're surviving, and they're not surviving. They're getting out of the business. They're running for another job. They're out there looking for jobs, but those jobs are not going to be as prevalent as they've been. Sure, they could go to Chipotle, make some burritos, probably make that $15 an hour. If they get promoted, maybe they get all the way up to $20 an hour. But does that really get them to where they can buy a house? No. Look, ask your Uber driver. Ask if he has a real estate license. Very likely that he does. 10% of them do. That's what I hear. And anyways, get out there every day. It's Monday. Give me the thumbs up. Why not? Have a great Monday, everybody. Fed Day, Wednesday. Come back here. Wednesday, the Fed announcement. Going to be up a quarter point. We'll see what way the market goes. Get out there. Have a great day. Bye-bye now.